About a year ago when I started this channel, one of the apps that I had looked at for real estate investing online was Ark7. They've been around for a little bit, but at that point, since I just got my eyes on it at first, I really wanted to get a good look at it, see if they had some traction over some time. And I thought it was about time that I got into this app and did a really good review for you guys. And I've done some other reviews of other platforms on my channel where I've dug in deep into the SEC documents and all of that. I'll provide that information in the link below if you want to look at those documents themselves, and I'll show them to you here. But I'm not going to dig into them quite as deep as that. I think it gets kind of boring. But I'll show them a little bit and kind of some information if you want to look at that, where you'd want to look. But really, pretty much from the front page or from the marketing side or the marketplace side of these apps, I can show you pretty much a pretty good analysis on whether or not these are good platforms or not. Just going over some basic numbers. My name's Brian Johnson. I'm a real estate broker. I've been a real estate broker for almost 30 years. I also have a role in property management. So I have a pretty good eye for looking at these platforms and knowing if these properties or these platforms are pretty good investments. Real estate's a risky business, and it's very area specific. So when you're looking at these platforms, you need to understand that. Also, when you're investing like this, it's a little different calculation than if you're walking into my office and you're going to be buying, let's say, a single family house to invest in. That's a whole different matter. When you're buying that property, when you buy a piece of real estate, the day that you walk out of closing, you're pretty much underwater, because if you went ahead and tried to sell that property with closing costs, every market's a little different. But if you're looking at 10% closing costs, and I'd say that's a pretty rough average when you have commissions and taxes, and in my state, in Washington state, you have an excise tax that's almost 2%. It's pretty fair to say you could be looking at a 10% closing cost. Now, I know a lot of you investors out there are going to say, hey, I can buy properties under market. That's great. If you can buy properties under market value, you're probably not looking at apps like this to invest in real estate. Also, if you're someone that can say, well, I can sell a property for sale by owner, I've done that many times, and I can save those closing costs. Again, for you guys that are crazy experienced in real estate and you know how to do that, and you know the documents and you know the marketing and you know how to negotiate with people, fair enough. But I don't think that when you're in that sort of place in your investing career, you're necessarily looking at some of these online apps to invest in real estate. I know it's about a year ago when I started this channel, there were some of these apps that I looked at that were pretty shady. I mean, like really shady. And I'm going to say right now, I made some pretty good calls on those, on which ones not to invest in. And then I think one of them, there was a couple of them now. I'd have to look back at my channel. They've completely gone under, and they were ones I gave horrible reviews to. Now, there's other platforms that have been around for a while, and they have a pretty steep, expense structure. I know Arrived Homes has a pretty steep expense structure, and I went hardcore on them. They're not a scam at all. They are legit, but their fee structure is pretty steep. I gave them a pretty rough review. So let's go ahead and step right now into Ark7 and basically I'll tell you what I think. Now looking right here, this is just their front page, invest in rental homes share by share. They've got 80,000 active investors. I think that's great. They've got $17 million of property value funded. That's pretty good for a start. Bigger, you could be looking at Fundrise and some REITs like that have a lot of money invested in real estate. But these are smaller apps investing in single family homes. So I think that's pretty good. And $2 million in cash distributions paid out to us as the investors. So that means money is going out. When you look at apps like this, you want to take a peek at social media and see what people are saying. One of the things, if you decided to invest in one of these properties, I would drop a smaller investment in there and just kind of see how it goes, like communication. Are you receiving emails about information? What's the structure? Are they asking you to help out on some of these apps, they want you to vote. I don't think on Ark7, though, they're actually looking for the investors to be participating in a voting structure, like a DAO, like you might get on Lofty. But a lot of people I know don't actually want to interact like that with an app. They just want things taken care of by the property management company. So you can see right here, you can buy shares for as low as $20 a share. They're in 10 markets right now, and we'll look at some of those here just in a minute. You're going to receive a monthly distribution straight into your account. Sell or hold for appreciation. Says that they have a secondary marketplace. I didn't see that yet, but I'm going to do more research on Ark7 as I invest over the next few months. And you can expect me to be putting out more videos on these guys. That's kind of giving away a little bit that I don't think they're horrible, and I actually am willing to go forward with these guys. And I'm going to start reviewing some of their properties, and I'll show you how I would look at them and the tool that I would use. So stay tuned if you want to see the tool that I use to run numbers on some of these properties to see if they're a pretty decent investment. So it says complete legal and financial disclosure available 24/7. Fair enough. No hidden fees or surprises. There's one fee in there that was a little hidden, and I'll get to that in a minute. Not the end of the world, but you'll see it. Some information from some of their investors. Wide range of high yield properties. They're affordable. That's $20 a share. That's right. Flexible to sell. So, I'm going to experience that coming up, but maybe not in this video, but we're going to delve deeper into that later. And then, of course, they have some information here about how you can get started. And they have a video here on one of their newest launches, but that's just sort of a marketing video on their YouTube channel. They've got some articles here that are pretty, some kind of like just information about how it works, what the benefits are, who can invest. Ark7 is open to anyone in the US that's over 18, so you don't have to be an accredited investor. Accredited investor status for a lot of these apps takes a lot of people out of the game. So this one is nice that it's just open for everybody. Now it does say right here, when can I sell the shares of my property? Investors can sell their shares on the trading market after a minimum holding period. I think I saw in one of these, it was a 3-month holding period. The minimum holding period refers to the shortest duration an investor must hold their shares before they're eligible to sell them. The minimum holding period varies by property and can be different for the same property depending on whether you purchase during the open offering or the trading market. So the open offering, I think, is going to be when they first bring a property online and bring on the very first set of investors, and I'll show you one of those coming up here. And then the trading market are going to be the properties that have been on there for a while, and you're just buying shares of an existing investment that they've already sold out, and now the investors are just trading their shares on their market. Now, this is something I wanted to show you guys right here. It's on their a little bit deeper onto their front page before you signed in. And that is you can invest using your IRA to buy real estate. So you're going to get some good tax benefits if you have an IRA and you want to invest in real estate. Step one, you can create an IRA account on Ark7. Fund your account by transferring funds from an existing IRA or making a contribution from a bank account. And then, of course, buy property shares. What types of IRA accounts can I open? Investors can open both traditional Roth IRA and Roth IRA on the Ark7 platform. The annual contribution limit is the same as apply on your normal ones. And then what is the fee if I invest using my IRA? There is no fee to open your IRA on the Ark7 platform. However, since individual retirement accounts are legally required to have either a custodian or trustee that holds your investments, our IRA custodian provider, Inspira Financial Company, charges a $100 annual fee per property, and it's capped at $400 a year per year. So if you have 4 properties invested, it's going to cost you $400 a year. If you have 5 or more properties that you're invested in your IRA, it's still going to cost you that $400 per year. Now, when you log in, here is the marketplace. A little more information at the top on how they work. You can see at the top right here, their distribution, this month's distribution was $69,000 and some change. So going down here, you can see on this trending properties, we're still on the front page of the login section when you log into Ark7. And by the way, there's a link in the description below if you want to go ahead and click on that. It's a safe link, so if you want to go visit the site, it's free to just log in so you can browse the properties. Use that link down below in the description. Let's look here at this one that's this trending property where my mouse is. So this property here is I think it's in Dublin, Texas. It's an offering, meaning it's just getting started. They just purchased this property, so they purchased the property ahead of time. Their purchase price, I like that they're being honest about this. Their purchase price was $201,000, which it tracks when I looked it up on Zillow and Realtor.com. Their gross rent is going to be $1,600 a month with a 5.69% distribution. And they've got 39 investors so far. And their share price on this one is $100 a share. I know on the front page it said there were some at 20. This one's at $100 a share. And then there's 843 shares have sold. So they're still looking for couple of 1,500 shares, a little bit more than that. How many shares are left? This is where you put how much you want to buy. Little information about the property market, little strategy, long-term rental. Then they have some information about the property here in the neighborhood like that, some school information. They got a walk score, current rental status. It's occupied on a 12-month. So they just filled this as a 12-month lease because it was owner occupied when I looked it up on Zillow and Realtor.com. That was purchased. It was an owner occupied property. So they've put a tenant in there. Now, this is historical returns. Yeah, this is just basically the Zillow Home Value Index. This isn't really that valuable. Going down, there's a map of where this property is located, and then some information on the town where it's located. Average sale price per square foot in this area. Now, here is the initial offering. This is really where you get into this property's numbers. Basically, we're buying into this property at $240,000. So that's a $30,000 premium over the market price that they bought it for. They might have bought it a little bit under market by coming in as a cash buyer because there's no financing on this property. So then, so 240,000. If they say they bought it at 201. Let's say it was worth about 210, and you have about a $30,000 premium right here to get invested. At first, when I look at these, I thought that was pretty rough. But honestly, and if I was to go buy in my market and buy a property for $200,000, I couldn't turn around and resell it. I would need to wait till that property at $200,000 got up to about 220 or 235 before I could even sell it and break even. So when I look at it with that light, this isn't so bad that you're being a little bit over market because you're really buying the cash flow right now and then the future appreciation. But remember, future appreciation gains in real estate, you're looking long term. I would be looking out 5 or 10 years on these properties if you're going to be investing in real estate. This isn't a quick investment. You're not going to be trading these quickly. That's not the way real estate works. Okay, so you can see right here, purchase price was $201,000. Closing costs and their offering costs. Let's go ahead and click on that little button. Obviously, we all know what closing costs are, title fees, all that kind of stuff, property transfer fees, inspection fees. They do inspections. Those aren't cheap. And escrow fees, brokerage commissions. And then the offering costs are the legal and compliance fees. And then that's kind of the stuff that they have to deal with the SEC. And then you've got the marketing expenses to find the tenants after closing. And then they've got some improvements in cash reserve. Right here above that, Ark7 one-time sourcing fee. This is what they charge as a profit for their company. It's built into this $240,000. I mean, they've got to make money too. Honestly, they probably made a little money on the commission when they bought it by using an agent or getting a referral fee. That's what I would do. But so they've got a $7,000 sourcing fee to run this through their system. That's fair enough. I mean, I don't love it, but I don't hate it either. They have to run the company. Improvements in cash reserves of $7,000. Down here, you can see the property strategy is a 3 to 8 year hold. And then the minimum holding period. Remember, I mentioned that earlier. If you wanted to sell your shares, they're looking at about a 3-month minimum holding period before you can even start trading your shares on their open market later. So I think that's pretty fair. I mean, you don't want to be, again, you're not going to be day trading real estate and be expecting to make a profit. I think this is just in something happens in your life and you've got to exit the deal and you just need your money back. You might not get all your money back. If you were to sell a property within 3 months, you're going to be underwater in almost all cases as a retail investor. So I think a 3-month holding period is pretty fair. Now let's go right here. This is the operating income and this is the operating statement. You can see their rental income at $19,200, and then they've got their expenses at $7,500. Zero on utilities because that's being paid by the tenant. Repair and maintenance, $1,000 a year. Yeah, fair enough. It looks pretty good going into this property. I didn't show you guys pictures, but we can do that in a second. Property taxes and insurance at $4,600 a year. Texas has high property taxes. Property management fee of 10%. So they have a local property manager at 10%. There's another management fee for the asset manager that's a pretty high fee, but we'll get into that. And then other operating expenses at zero. This is where I have the only issue I have with this platform is they should be a little more upfront about the this other management fee for the asset manager. That should go here because that's a calculation coming off the cash flow. Though I think the way that they word it, they take that asset manager fee off of the net operating income because they call it the free cash flow. So it would be coming off of this right here. And then they've got down here, you've got the operating agreement, certificate of the register series and the series designation. And then the offering circular is kind of where you want to go. So let's look at the picture of this property. If you're going to be investing, like I said, it looks pretty good on the inside. There's the outside. These are probably the marketing pictures from Zillow, I would guess. They may not be. I mean, there's no way to know when they took these pictures. Though you look at these pictures, I mean, this looks pretty good. I would bet $1,000 that this is virtual staging and this was a vacant property because, well, it just looks virtual staging because the rest, like that's vacant, empty right here. Big open spaces. I like that. I don't know if that's real wood floors or LVP flooring, but I like that open look. I like the bright colors, look really nice. That's kind of a cute bathroom with this funky open shower. There's the master. Again, that's got to be virtually staged. Here, let's look at that here. There's another, I think that's the second bathroom. There's going to be another bedroom. Maybe that's another bedroom. It's got a big laundry facility, though they don't provide washer and dryer. I wouldn't provide washer and dryers on my rentals either. If you provide that, then you have to repair it. So it's better just to let the tenants bring their own washer and dryer in. Always let them bring their own washer and dryer in. They can get them on Facebook Marketplace for $100, and it could cost you $300 just to repair a system that they've broken if you provide the washer and dryer. So there's another shot from the front of the house. There's the back of the house. I'm not in love with the back of the house, but it is what it is. And there's a pretty big backyard. This is a 10,000 square foot lot. So that's about just under a quarter of an acre. So that's a good sized lot, though it's kind of back there. But it's big. It looks like, there we go. There's some information. There's just some pictures of the neighborhood with this Dublin, Texas. So, not super exciting down here, but I like the rent structure on this actually. So when I said you could go look at the SEC filing for this property, let's take a peek at that right here. So one of the things you want to do on something like this, you guys, is you want to hit F4 on your keyboard and then type in something here on the address, 516 West Live. That was the address. It's going to give you more information about the series offering. And what I want to show you is this right here. So right down here towards the bottom, you can see where my mouse is. It says property manager. The managing member appointed the asset manager to manage the Oak property has entered in an asset management agreement. Pursuant to terms of the agreement, the series will pay the asset manager an annual fee of 15% of free cash flows available for distribution pursuant to the operating agreement. So remember I said when we're at the property right here, let me go down and show you. So that 15% of the free cash flow, the way I read that is going to be 15% of this net operating income right here. Now, that's a pretty steep fee right there. I kind of don't like that, but it is what it is. And in fact, I think I'm going to run these numbers a little tighter than this right here. Let's go ahead and look at my numbers. So there's a website called DealCheck.io. I'll put a link in the description there also. I'm going to show you guys the free version of DealCheck. DealCheck is a great way if you want to do a property analysis. If you sign up and pay their fee, it's even better, but even their free version gives you some good information. So I entered this property into DealCheck to analyze their numbers. So here we go. We've got all those numbers, and I actually did put in that 15% fee, and I'm not going to bore you by breaking down all the expenses and all that, but I broke them down into here. I put them all in so I could get good, better numbers. Don't worry about cap rates and stuff like that. This is a single family house. But if you go up here to these buy and hold projections, this is what I like down here. So the purchase criteria. Number one, it fails the 1% rule, but almost every property you buy at retail is going to fail the 1% rule, and it fails the 2% rule. But again, like I said, if you want to make these 1% and 2% rules, you need to be out there door knocking on properties, not buying them on the MLS. There can't be any sort of commissions paid, and you're going to be negotiating hard in today's market to get that price down low enough to hit that 1% rule on an investment. The 1% rule is basically if you buy a property for $200,000, you can rent it for $2,000 a month. So that's the 1%. 1% of the purchase price is your monthly rent. You're not going to be finding properties on the market for $200,000 in most markets that will rent for $2,000. But it does pass the 50% rule, and it does have the cash flow of greater than $150. So again, for an investor who's buying a property off market, this might not fit for you. But for us retail investors, if you're just looking, you've got a few hundred or a few $1,000s you want to invest, and you can't go out and actually afford to buy a property, then you know what? This isn't that bad of an investment. I think it's actually, it would be pretty good if I would drop a little bit of money into a few different properties. Never put all your money into just one property. A vacancy rate could kill it. So I would drop money into multiple properties. Let's say you wanted to spend $500. Then I would put $100 into 5 different properties. And if you want to invest more, you want to watch those returns over time, and you want to watch their communication, how is that individual property being managed, and then maybe I would drop a little bit more in. If you want to watch a video about an investment platform where you can invest money into helping fix and flip guys that has a return of between 10 and 14%, then click on the link right here. And this is a great opportunity if you just want a different, higher, slightly riskier cash on cash return.